Welcome back to episode 16 of the Backholder Pod. So today, I think we are short of one member. So Kelvin is happily enjoying his holiday. I think he went back for some Chinese New Year visit. And that's the life of a YouTuber, right? He gets to control his time, his location freedom and stuff like that. But anyway, if Kelvin you're watching, we gravely missed you. So today it's just Eric, Bunti, and me on. So I think for today's episode, we split it into two core parts for two main discussions. The first part is when most of the US big tech actually just reported their earnings. So we'll share some of our thoughts and opinions around it and whether still can buy or not. And on the second part, we know that there is this recent debate in Singapore's parliament where there is this constant hounding on housing affordability, HDB, and stuff like that. So if you're interested in this kind of topics, we tend to cover Singapore-based related content and more importantly, things that can link back to your lifestyle and your finances. Do remember to help smash the like button and subscribe on your way out as well. So yeah, I think just to kickstart the entire discussion, I'll just pass on to Eric to maybe share your opinions with the audience on what you think or your general vibe of when you see all the different big tech just reported earnings last week. Eric, please.
Okay, so my general impression, because I didn't deep dive into these companies, don't really hold them. So my general impression from what I've seen is basically the big tech, generally, they are not doing that well, like in terms of their earnings. I think just now we were saying, right, Meta, Apple, they miss the revenue and the EPS, I think. Yeah, so it's not that great. Amazon, I think the concern for Amazon is like, even though they kind of meet their numbers, but I think the growth for the cloud business isn't really doing that great. Like it used to be very, very high growth, if I don't remember. Like I think it's like what, 40%, that kind of numbers. So now recently it's dropped down to like 20-something%. So it's not looking very good. Then Google also, I think the ad revenues and all that also dropped pretty drastically. I think it's also due to companies spending less for their ads. So my general impression is that their numbers are not pretty. Basically what we expected, I think the market also kind of expected that their earnings will not be pretty. It's just a matter of how bad it is and is it still above the low bar. Yeah, so I think my personal take is I don't really want to get into this big tech because I already have QQQ. So I'm not like a really keen, because like it's like a proxy. If I buy some of this big tech, then it's like I already have QQQ. I'm like increasing my exposure to the mega tech. So for me, it's not so attractive.
Right. The funny thing is, despite all these misses, right, some of them, even after the earnings, actually the stock price actually went up, and some of them actually went up to a large extent, like Meta. So I think before I provide my comment, maybe Bunti, I do know that you have QQQ in your portfolio and you still overweight on many of these big tech companies. So just your general thoughts on things that you own, like Amazon, Apple, Microsoft. Yeah,
I think you're right. When it comes to these stocks, I mean earnings, right? It's interesting that generally speaking, I think all of them not doing very well in the most recent earning release. But some companies, their stock price just went up a lot, but some of them just linger around. So the one that went up a lot is Meta, and then Apple also went up quite well. But for the others, for example, like Amazon, really it shoot out a little bit and then come back down, right? So I think if we want to understand why after it released and then the stock market reacts so differently for all these different companies, we cannot just stay at the, like the headline numbers, like what are their revenues, what are their earnings. We have to go a little bit deeper into the details. So I'll give one example, like Apple result is doing okay. But if you look at their revenues, actually they didn't grow their revenue. Revenue actually dropped compared to last year. So if you are investor, you will feel that, hey, how come I thought that all these companies, not expecting them to grow like 20-30% every year, but at least they should keep their growth rate above zero, meaning that still got some growth. But now the growth become negative. If you just look at the headline, it's really like a bit concerning there. But I think if you look at the transcript or you're listening to the the shareholder call. So you will notice that they give some explanation. Say, for example, like Apple, they actually have some production issues when China was hit by COVID in Q4 last year. So they don't have enough inventory to sell the iPhones, right? So all this, there will be some sales that got pushed to Q1, meaning in January, February. So that one, I think as shareholders, we can expect that the Q1 sales number will be better. So I think that one, I mean, as a shareholder, they give this kind of explanation. I think, okay, I can recall back, okay, that something happened in Q4. So it's understandable. It's not like something that's concerning, or the phone they came up with is not able to attract customer anymore. It's not something like that. So I think that's good. And then comes to Meta, I think last year when Meta share price dropped a lot, I think that one is because of the, all this worry about Mark Zuckerberg going to spend billions and billions of money into metaverse projects, and we don't even know that this project will be successful or not. And then I think in the most recent call, Mark actually mentioned that they actually want to, they call it what, 2023 is the year of efficiency, meaning that they're going to control the cost a lot better. And then when it comes to metaverse, I think the general consensus is that they will still continue to do it, but how much money that they put into this area, I think it will scale down over time because they still want to make sure that the company is profitable and then have all this free cash flow so that they can return back to the shareholders. I think shareholders, investors, they listen about this, they kind of upbeat of the upcoming quarters. I think that's why these two companies going up a lot. But the rest, I think there isn't, like good explanations. So for example, Amazon, I think they still have problem with their logistics, not able to monetize well and so on. And the AWS growth has slowed down. I think these are the challenges that they're still facing. So that's why share price also didn't react accordingly, like didn't react well. So I'll stop here.
From Eric's perspective, he said that he's probably not adding, right? So I just wanted to know from Bunti, what are you doing, or how are you positioning yourself in this deep? Are you buying? Are you waiting? Or what are you doing?
I think if we just look at the share price and look at the earnings, I think that it reacts quite according to their fundamentals. So I don't see any, let's say, like inefficiency with regards to price response or price movement.
Meta up 20%, not inefficient?
No, as in up 20% because now we see that in terms of their direction, they really have a much clearer direction as compared to last year. And when it comes to all these, recommendations, I think that there's some good traction there. So I think fundamentally they are doing much better compared to last year. And so the share price react favorably. Right? I think this is all good. It's just that when it comes to selecting which one, I don't have like any insight to say, okay, which one fundamental is good, but the price didn't react. So we need to take on all this opportunity. I don't have this kind of things to share. So I think going for QQQ or some, like tech ETF is still the recommended way to do it, to get exposure on these companies and betting that over the long term, technology will still be driving the economy forward. So as a shareholder, you will benefit from that. Yeah.
Right. So this is the correct answer. I want your answer. What are you doing?
Yeah, I think I will just get ETF unless things change. Yeah, ETF is the way to go.
Okay, understand. Personally for me, I haven't been really buying QQ or anything because I tend to like stock picking. But one of the things that I'm currently doing is I'm actually selling puts on some of the big tech names that I thought that essentially I want to own. And from that perspective, the strategy is a little bit different from Kelvin. So I know for many Kelvin loyal followers, right, he likes to do the whaling, right? So when he sells in a very short time frame because you want to maximize the time decay. But for me, I sell lead puts, meaning I sell out into 2024 January, or I sell out into June 2024. But the premiums are a lot higher, but there's very little there's a lot of extrinsic value. No, there's a lot of intrinsic value. There's very little extrinsic value. The time decay only comes in at the last month. But I don't want to go too technical. Essentially, what the logic is let's say for Amazon, I sell it at 80 strike, meaning that 1 year later, if it really goes below 80 strike, I'm just going to fork out 8,000 to buy 100 shares of Amazon. So that's just the general logic of why you sell lead puts. The bad thing or the downside to that logic is if Amazon just moons from here, I only keep the premium. I don't have any share exposure. So that's just how you weigh your pros and cons. I think I do echo what Eric said. It's kind of priced in a way where the market is really trying to front run it. Because if you look at many of these big tech earnings charts, right, it has already come down, like, I wouldn't say substantially, but it has corrected quite a period. Apple from the highs of like 170, 180, it's down. Like from 3 trillion, it's like 2.2 now. Amazon also from like 160 plus, now it's back to 100. Meta from 300 plus, it's back to like, that time was back to 100 as well. So many of these expectations are priced in, but there are some anomalies like Meta. So I'm a Meta shareholder, so my view will be biased, but let's not get into it. Generally speaking, I think if you still believe that tech will be the way to go, or you want to have a vested interest, then you don't want to pick stocks, then yeah, QQQ, it's a decent way to enter, I guess. But I would just like to say, don't be too caught up in saying that, stock market is down and everything is down, and let's not invest in big tech companies, because you only lose
I
money.
have a question for you, right?
Sure.
You know the Meta, right? I heard that their Reels picked up traction quite a bit. And then I think Mark actually remarked that he remarked that they are going to monetize the Reels. So Reels is like something like, is it something like YouTube, but it's in the handphone format? Something like
it's
that.
a TikTok.
It's a TikTok. Yeah, TikTok copycat.
Like short form also lah.
Yeah, TikTok copycat.
Okay,
I'm not hopeful.
The revenue from there, you don't think is going to be very meaningful?
It's not. At least for the next 12 to 18 months, it's not. I think Mark himself also made the remark that it's not going to be meaningful, because there is a very hard, they have a very hard time to try to monetize lah. I mean, because it's a new way of presenting content. So the architecture is not done yet, and everybody's trying to figure it out. So even TikTok hasn't even found the formula, even though they're like 5 years ahead of the curve. But they are still not doing very well in terms of, I mean, they just turned profitable, I think last year. That was the first year of profitability, despite burning so much money. But I mean, if I take guidance from what the CEO has to say, because he's in the driver's seat, he himself is not confident. So I'm actually not confident. But in terms of user metric wise, time span, how many times they enter, daily active users, yes, it's on an uptrend. But at the end of the day, as a shareholder, how you earn money? There's only one way you earn money: profits. They need to turn it into money. No point having so many people on your platform, or people spending time there, but you can't turn it into money. So there's just some.
So in your opinion, the big bounce up, right, almost doubling from its low, right? Is it solely due to being oversold, or is because he got rid of a lot of middle management, that kind of thing?
It's probably a multitude of, like, it's a collision of many factors. But that huge jump up, I really think that it's because of the share buyback. Because before the earnings, it was around $300 billion market cap. After the earnings, now they're authorized to buy back 50B. So 40 plus 10, the previous 10. That's at least 10 to 12% of the market cap. So if they do it, I don't think they'll execute it in 1 year, because their cash flow now also a bit of an issue. But if they do execute it in the following 2 to 3 years, and assuming that the share issuance, they don't print too much shares in the meantime, that's 10 to 12% of the market cap wiped out. So that's definitely bullish from an investor's point of view.
Yeah, I think it's not like one things that point to that. The story that the management tell the shareholders is that there are a couple of points that they all have to align and come together. So if you remember last year when the share price got hit badly, I think we also, 3 of us have a call to discuss about Meta specifically, right? We say, okay, there are so many challenges. For example, like Apple with their, the iOS changes, all these things hit their tracking and then hit their revenues. I think that's one. And then the other one is that they say we are going to increase our spend on metaverse a lot in coming years. So that I think also, shock the investor a bit with regards to, okay, if you keep on spending this kind of money into metaverse, which is not proven, and where's the money for shareholders, right? Where you got the money for all this, share buyback and so on. But now it seems that they turn back quite a fair bit with all these things. So for example, like the iOS things, that one is, we call it already lapsed, meaning that if you compare year to year, this one already happened like 12 to 18 months ago, so already lapsed. And then when it comes to cost control, they shows that there's traction there. Of course, there's, I think one example is that they had a layoff recently, right? I think that one also helped to control their costs.
Actually,
and then,
on the Apple privacy thing, I also realized that looking back, this is hindsight bias. The CFO actually went to send back the numbers. They said that Apple is going to affect them in terms of 10 billion in revenue. But then when you really compare, right, there was down like 1 point something billion. So sometimes I feel like it's a bit exaggerated because I don't think that, assuming that if Apple didn't change their policy, I don't think the revenue will grow by 9 billion. So that 10 billion number, he just pulled out from somewhere and then he just make it sound like, oh, it's very bad. And then in hindsight, it looks like Apple is bullying Meta so that Meta can be off the radar. But then you see really like, oh, they're just sandbagging the numbers.
Yes.
Then they also try to declare a lot capex, a lot of expenses. Then they keep walking back. Oh, less 2 billion here, less 2 billion there. Then you see really people build their model, they follow your guidance. So they always, if you're conservative, they'll use the higher end of the number. But then they keep walking back, means this is 1, 2 billion extra to shareholder every time they walk back one time.
Yeah.
So that's why the price also kind of jump up. But back to Punti.
Yeah, I think you're right. So for example, like they walk back on the cost, they walk back on the investment on metaverse. So all these like couple of billions here and there added up. So they say, okay, all this we're going to lump into share buyback. So the share buyback is one part of the story. The cost control, all these metaverse things, all this added up together. It make a much better story to tell. And that's why if you are still shorting on Meta, I think you need to be careful because now they have all this money to do the share buyback and squeeze you out. So got to be careful on that now. So I think people, as investors, they will react positively on a coherent story. If they don't know what they are doing, I think people will just freak out. Investors freak out first, right? Yeah, even management can't convince me. So why should I hold your stocks, right? So now I think they are turning in that sense.
Yeah, so when the stock was at $80, $90, I was convinced by the bear story that, oh, Meta has lost his way. That's why I didn't average down. But I didn't really sell out particularly because my fundamental thesis is still intact. Like the whole share buyback idea, the walking back of expenses, that was part of the thesis, but it wasn't playing out like then. So I didn't add to the position and limit exposure lah. So so that was the whole Meta story for my experience.
How much of it do you think is like the whole macro market, right? Is rising tide lifting all boats kind of scenario rather than just a Meta, sandbagging, walking back their estimates story?
But you see, the rising tide lift all boats didn't lift all boats though. Google and Amazon is still down, even though a decent enough quarter. You get what I mean? So that rising tides thing, sometimes yes. So I've just pulled out. So SPY for the last 1 month, it's up 7%. QQQ is up 14.5% for the last 1 month. There are definitely companies that were benefited, but I think it's also quite fair to say that Meta was pretty oversold at $80, $90. The numbers didn't make sense at all. But even though I know the numbers didn't make sense, I still didn't dare to buy because the story didn't make sense also. So when you are served with that kind of scenario, story don't make sense, numbers don't make sense. So you want to believe which one? You believe the story or believe the numbers? That's all I can say for Meta.
Yeah, this one also is a good examples of what turned out in reality versus the expectations, right? So to make money, sometimes it's not just about like betting what will turn out a lot better compared to like just a normal. Say for example, people will say, okay, let's buy Tesla because they will go to 20 million car. You are trying to visualizing a very bright future and you bring it back into your investment decisions. I think that's one way to do it if you really believe that it will turn out very well compared to just a general opinion, right? The second way, which is more closer to what we call the value investing, is that actually you are not hoping that Meta is going to grow back to 50% and so on, right? It's not like that. It's more like just, okay, there's a lot bad things has been priced in. I just need to hope that I just need the companies do less bad. Then I'm getting a good return already. I think this one, of course, is with hindsight, we can see that, okay, it worked out well. But of course, like what Chicken mentioned, during the low, do you dare to go in with such a bad fundamentals or not? So that's the story. And this one differ by company to companies. Not every companies can have this kind of rebound. Yeah.
So talking about story, right? Now let's talk about like the big picture story. Because I know I'm not too sure whether you guys incorporate macro decisions or macro conditions into your investing. I think for Bunti, he doesn't because he just keeps buying and buying and buying because I don't know, he has a money printer at home essentially, so he just keeps buying regardless of the macro picture. But I want to ask Eric also, do you care about like, will you personal decisions aside, meaning that if you have a big ticket item coming in, that one I understand, but let's say just normally, right, like in a normal condition, you have income coming in, do you take into account all this recession, pivot, this kind of nonsense into your things, into your decision framework?
I think it pretty much depends on what is your plan and what is your actual cash flow. I mean, if let's say you got maybe if you got 20,000 coming in every month or 50,000 coming in every month, I'm sure you can fork out maybe a few thousand to DCA, right? Like over the long term. So that one is still fine. But the difficult thing is that if let's say your cash flow is not that strong, right? Then I think the narrative part may affect you. I think if I look back at my own kind of history, right? My own kind of the way that I act during market downturn, right? When market crash and pull back, I realized that I'm the sort that, you know, buy high and don't dare to buy low. I buy when everyone is very happy, like, wow, going chong up, everybody what then all in apes together strong that's like the normal investor, right? Then but when the market goes down, right, you become very fearful. I become very fearful. and I think that I tend to give myself a lot of reasons why I don't want to buy in. So looking back, I realized that I have this kind of tendency. That's how I see it. But I don't know, how do I make myself invest better next time? Is maybe to just be consistent, like, and don't buy in an amount that is a lot quite significant to you. Like to me, what is a significant amount? It may not be the same as to Bunti. Maybe Bunti like DCA 10,000 is like peanuts.
Oh,
but for me, DCA 10,000 is like wow, a bit xiong. So the amount actually makes a difference. Let's say DCA like 500 a month. I think most of us should be okay with that, and it won't affect your psychology so much. So sometimes getting that balance between your greed and your fear, I feel it's quite difficult.
Yeah, to answer your questions and also relate back to Chicken just asked, right? Because just now Chicken asked about like, okay, do we consider macro or not? So this is the questions. But to answer to you, right, Eric, I think the way to handle that is that we all need to recognize that you say you feel you are fearing that the market will drop when everything is red, right? I think that one I can assure you are not the only person. Even I myself also, when the share price drop, right, I also think that it will continue to drop because over the short term, usually stock price, they have all this what we call the momentum kind of things, right? Is that if it goes down, right, it tend to go down further. It is rallying up, it tend to continue to rallying up. So this is the characteristic of the stock market. So when it comes down, right, then all the bad news will come together and then we are all fearful. But the question is how to address that, right? I think the key to that is that you need to have some sort of a system to do it. So a system can be very simple, can be very complicated, but you just need to have a set of rules, and then just execute according to that rules. Say for example, DCA itself, right, is a system. Like you say, my rule or my system is that I buy every month, and every month I buy, let's say 1,000. So you basically take the emotion away from all these decisions, and that will help you improve your investment, because the emotion part will get out from the pictures. So I think that's the way to go I would say for 90% of the people. Then for the 10% of people, those who think that they are very smart, they can time the market, they act like they are the genius, right? I think just feel free to do it. I think that is good. If you are genius, then you can execute well. People get 10% return from stock market per year on average. By doing DCA, you can get 50% per year. I think that's all good, right? Just go ahead. Yeah. But you need to assure yourself that you are the genius, then you can do that. The rest of people should just follow a consistent rules, and that will do well over a long period of time. Yeah.
Right. So now at the end of the day, this is still an entertainment platform, right? And we want to kind of act like geniuses as well in hindsight, right? So, I mean, looking forward out into 2023, I just want to get your brief take, because this is an update, long overdue update actually, because I think the last time we made quote unquote predictions was back in December. And back then, I think Eric was still pretty upbeat, even though things still looked bad. So in hindsight, Eric is pretty right after 1 or 2 months, while me, Kelvin, and Bunti were actually slightly on the more bearish side. So I just want to do a quick stock take. Do you still hold your position, and what do you see in 2023 after this rally? Because I do realize that there's a very strong anchoring effect. Like whatever happened, we tend to place more emphasis in whatever happened in the last few months compared to whatever happened. So if we pull out in 1 year, the market still look bad. But if we focus in the last 1 month, actually the market went up. Then people will say, why if you pull out 20 years? Yeah, 20 years, then it'll still look like we are going up a rocket ship. So I think difference in perspective, but if we want to limit the discussion or make it more meaningful, we need to set a kind of time frame. If not, everybody will say the market always go up. Then everybody will win because we know that the market will go up. But who knows whether it's in 10 years, 20 years, or 50 years. So just to get an update, since Eric is the odd one out, just to get Eric's opinion first.
Okay, I personally do believe, like I told you, right? I believe we are in the disbelief stage. I believe we are in the disbelief stage. Yeah. Why do I say that? Because I also don't believe how the market keep on rallying. Like, how come it doesn't go back down? Like, it hit resistance and it just basically flirts and go above a bit, below a bit, above a bit, below a bit, like tempting you, you know, you want to come in, you want to FOMO, or you want to chicken out, or you want to like sell call, and then after that I wreck you. I don't know, the market is really like, you know, tempting you to do silly things, you know, and I think also, like when I stay by the sideline, right, I make a decision, even though I was quite optimistic. Like if you remember 2 months ago, I shared with you guys, like I feel that the market has turned the corner. I think that you will continue to go up, but I don't think you will chong up like a rocket lah. But I was wrong on that because it did chong up like a rocket. So sure. So I mean, I was bullish, but I was not that bullish. I'm like, okay, it may bounce up a bit and slowly grind up. That's my thoughts then. And then after, you know, specifically for Tesla, right? Because when Tesla moons, right, it makes a big difference to my portfolio. My portfolio like looking very nice and green. I kind of like it lah, but I also kick myself for not daring to buy in more when it was like absurd kind of valuation. Because if you remember, right, at Tesla at about 130, 120, that kind of range, that's when Adam Khoo came on, right? Like last December. So I was asking him, do you add or not? At the time, the valuation, I thought that is really nuts, yeah, really crazy. It went all the way to 104, and then people calling for $20. Like, I don't think you go to $20, but I honestly, I confess, I did think that you will go slightly below 100. I felt that it was very, very probable even to go like maybe 90 or even 80, 85. Yeah, but I think below that, I will really start buying already. I won't care already. I'm like become ridiculous. So yeah, lor. So what was your question again? I thought
Updated
yeah,
view.
I'm still optimistic lah, but I'm like my previous view, right? I don't think we will shong all the way up to previous all-time high. Like specifically for Tesla, I don't think we will go up to like 400 anytime soon. I do think, however, we will be stuck around this range, about close to 200 all the way to like maybe 250 thereabouts. Yeah, I'll be really happy if it can break like 250 this year. That will be nuts, yeah. But I don't know how that's going to happen because narrative is still very bad, right? Like inflation is still relatively high. You know, the interest rate is still about 4-5%, not looking to come down so soon. So I don't know. Like, Bunti, do you have a
what?
More educated opinion?
No,
mine is very gut feel. I think mine is very.
But yours one is the accurate one. I remember we all draw the downward channel, and you are the one that say, okay, we are breaking out. So I think you lost on that bet, but it turned out that actually you just early by, you know, maybe 2 weeks, you know. so I think I consider you won that bet. My turn. I think for my opinion on this is that 2 things I will look at. So the first one is the, you know, all the corporate corporate results. So, for example, their revenue growth, their earnings, can they make money or not? Can they make more money or not? And in the case of Amazon, can they actually burn less money or not? Because they have been burning tons of money in the past 2 years. So all these corporate earnings, I think, especially for tech, it should come down. We have seen that in the earning release that we just talked about earlier just now. And then maybe for other sectors, they are doing relatively well. For example, energy, they are doing well, right? So on the S&P 500 level, hopefully they can stay, let's say, like relatively stable. That will be good. I don't expect them to rocket up a lot now because of the condition that or environment that we are in there. So that's one thing that I'll look at. Second thing is that, when it comes to liquidity, still the liquidity is draining out because of all this monetary tightening, and we don't see that U-turning anytime soon, right? Meaning, talking about from now till end of this year, I don't know. I don't expect it will happen that soon, at least not in the next 6 months. So I think you combine these two, I would say that it's unlikely that we will see a moon and go back to all-time high. That one is not under my expectation. But whether it will go back U-turn and then go to 52 weeks low or not, I hope no. It will be, like a slow grind until we all we give up on the stock markets. That's also quite bad, right? So because once the confidence is gone, it's harder to build it back again. So it will hurt the economy as well. So hopefully we are not in that bad situations.
Do you think we are in a bear market rally as opposed to the trend turning?
I don't know whether it will be a bear market rally, but as per any, let's say, recovery, some retracement is always we should expect that. It shouldn't be like one straight line up, and it will retrace. The question is more like, once it retraces, how low it will fall and then found bottoms, right? So I think that one is a question mark. But I'm kind of like, not super hopeful that we will get a big rally. And on the way down, I just hope that it will be supported, not like one straight way down and then we have something that's broken, some big default and so on, right? I hope that there's no such situations. Yeah.
In fact, I want to share with you guys, right, in terms of TA, PT Kelvin is not around today. In terms of TA, right, Adam Khoo mentioned that the 50 moving average has cut above the 150. That's the first one that mid to long-term traders look at. And the second one is the 200-day moving average. So the indices have break out from the 200-day moving average. I think that is like fairly bullish. If when I first started learning about TA, right, the 200-day was one of the first things that we learned. Is like, if you're a long-term investor or trader, right, this breaking of the 200-day is a very significant milestone.
Yeah, useless one. It broke out, right? You turn it back down again, so back to square 0 1. So I'll I want to listen to Chicken. Yeah, your turn to give your opinion.
Actually, my opinion quite controversial though. So we had an argument. I wouldn't say argument we had a discussion in our own group chat, right? I actually stand on the opposite end of Eric. So Eric thinks that we are in a disbelief stage. So if you really go and Google the psychology of markets, that graph, right? Right after a disbelief stage, then we will slowly got hope. Then you start building momentum and euphoria again. Then the whole market cycle repeats. I actually think that we are only like halfway, like 半山腰, halfway of that. I don't even think we actually went through the entire capitulation phase yet. By capitulating, I don't mean high growth or Tesla. So for some of them, I agree that already went through that phase. But on a broad market level, like for example the S&P or Nasdaq or whatever, I don't think we have went through that cycle. So I can't really pinpoint, but if you really want like my quote unquote unprofessional opinion or unsolicited opinion, I think we're much closer to denial. We haven't really go into the panic capitulation part yet. So I just feel like we are, if to answer the question of whether I think it's a bear market rally, I think it is a bear market rally. Multiple opinions. I don't really believe in what narrative plus price action equals to, narrative plus liquidity equals to price action. There was this formula that was thrown around. To me, I think I just judge on a few things. One, I think the risk-free rate is a very important metric. And when a lot of smart people in their space, Howard Marks, Ray Dalio, a lot of them say that more and more people are leaving the equities market because the bond market or other instruments can model after equity returns. And by equity returns, I mean around 8 to 10%. Like there are a lot of like grade A or grade B bonds that can model that kind of returns. Then people won't want to take risks. And those are just a few data points that I triangulate. So in that case, if risk-free remains high and sad to say, I'm actually with CGS on this front. Like whatever CGS say, it's quite aligned with how I'm viewing the markets. But all else said, even though I feel like we are at denial phase, I'll just like to preface this. It doesn't affect my investment strategy. So you having a macro view, that's your own problem. That's for entertainment purpose. I think that it's going to go lower. But in the way I invest, I'm still going to buy indexing. I'll continue indexing. If I think I'm investing like in specific companies, for example, I'm looking to accumulate Amazon. I want to accumulate Amazon. I do an individual company analysis. I do a valuation. I think it's cheap. I will still buy Amazon. I won't, because I think it's going to be bad. That's why I keep my funds first and I don't buy. So you need to kind of be discerning of those two, like your macro view and what you're going to do as an investor. So that's that part. Then on I want to add to what Bunti said. Why I don't think we have kind of bottom, because I kind of just came out from a capitulated market. And I kind of can feel what capitulation actually feels like in real time. So then when I look at the US market, when I'm talking to my friends, or even in this backholder pod, or I connect with other investors, I don't feel it. Like when capitulated, my Instagram DM actually shot to an all-time high, like in terms of requests and people saying, "Oi, what happened? Why like that? Why?" You get what I mean? But when the US stock market was going down, even at the lows of, I've forgotten, was it 3,800 points? There was no such feeling. So I don't think we capitulated. But that's it. The market cycle can very well just continue on. Like you don't have to always go to capitulation so that it bounce back up. But that's that. And I think the last point I want to make was this idea of losing confidence in investing. I think recently we've also seen, because T-bills and all the bonds, Singapore savings bonds, treasuries have been going up. So a lot of people started rotating money out. Like, I think the stock market is a stupid game. I don't play already. I'll take my 4%. I'll take my 3.70% for 10 years. I do see that period as some sort of bottoming, but I don't think we have truly bottomed. So that's just my very uneducated guess of the market. So yeah, that's that. And
Chiking, I want to ask you, like, what will refute your this feeling that we are in a bear market rally? What must the market do in order that this theory is disproved?
I think in the following, I guess, two years. I think 2 years is a not very short, not very long time frame. So within the next two and a half years, I think it's a good enough timeline to say that my theory is disproven officially, that it wasn't a bear market rally and the market continues going up. Yeah, because
2 years.
Yeah, 2 years.
Okay.
I mean, even so similarly, like what Michael Burry, right? He was early 2 years as well. So the 2009 thing happened. He started shorting the market in 2007. So a lot of people say that, he's a broken clock, right twice a day, that kind of thing, right? Sometimes thesis needs time to play out as well. So I feel like 2 years, like 24 months is a long enough timeline to admit that you're stupid. That's how I can put it. Does it make sense?
Can.
Yeah.
So glad this is recorded. Yeah.
Yeah. So all the positions that we take are all public, so you can hold people accountable, right? That's important, holding people accountable. Yeah. That's that. And any comments or Bunti, do you have anything to add? Nope. Okay, great. So I think just a quick commercial break before we actually go into the HDB affordability discussion, especially it's a hot topic for Singaporeans. Just a quick plug. For those of you, I know many of you are avid investors. You guys, whether you buy index funds or invest yourself. So Momo has been a great partner to all of us. And I think most of us also created a Momo account already. So just a quick plug. They currently are running a very lucrative promotion for Singapore users. And we know that most of you are Singapore users. Until the end of February, which is the 28th, if you deposit more than $2,700 into Momo, you can spin a wheel and you can get up to 1 free Apple share. And that's around $150 as of the time of this recording. And more importantly, they have a new in-app game called A Fishing Joy, if I'm not wrong. And you can play the game to win up to $88 in cash that will be credited to your account. So if you're interested, you can go to the funds tab to check it out. But yeah, the sign up thing, I think there's a 30 days lock-in period. But if not, you are getting quite a high ROI if you actually do get a free Apple share. I mean, it's completely for free. You just log into your SingPass, you just connect everything, and you just deposit $2,700. So don't miss out on this promotion. So yeah, I think then transits over because it's a high cost of living. Everybody tries to get as much referral rewards as possible. And then for this high cost of living topic, one of the most cornerstone topic for Singaporeans is the idea of housing, which explains my background. Housing is one of the most important purchases that probably everyone will make some time to come, especially for many viewers who are in their 30s and 40s. So I think in the most recent debate that just was conducted like yesterday, which will be spanning throughout the entire week, many people or many Singaporeans have been lamenting that, hey, it's too expensive. It's getting more and more expensive. Resale is getting more expensive. Private is getting more expensive. Everything is getting more expensive. And I think from my own perspective, right, like my own group of friends, some of them are getting married and some of them already went to get BTO. And I think I had 2 or 3 particular friends that went to get went to BTO and they were successful for getting at, was it Bukit Merah or something? It's in the prime area, the prime housing area. And guess what? Want to take a guess how much debt they're incurring? Would you want to guess? 4-room flat.
No, 4-room flat, I think if good area, 700K.
Right, Eric?
I think around there.
Yeah, it's near 800K, guys, like
Whoa.
750K. And
Yeah.
they're a fresh grad with no pay, by the way. So they have 0 pay. Everything is based on potential, but they don't need to pay anything yet because they can take a bank loan and stuff. So I'll just want to contextualize also for many fresh grads in our area, or at least my surrounding, the starting pay is around 3.8 to 5K. That's the range. And it's provided by, it's transparent. You can go search NTU, NUS Graduate Employment Survey. So let's assume that it's in the middle, 4 to 4.5K. So their annual salary would be around 50K. 4K times 12, yeah, 50K. Let's round it up to 50K. So 50K, if you're taking a 750K loan, that's 15 times your annual income. I mean, assuming that there's no increment and whatnot. So that's why a lot of Singaporeans are lamenting. But of course, it's a dual. If you have dual income, good for you. You times 2 that, then you shorten it from 15 years to 7.5 years. But I just wanted to get your rough opinions, like Eric and Bunti. Both of you are house owners, so you have your own HDB. So what do you view of this entire episode of house prices just continuously inflating upwards? Maybe Eric, I'll comment first.
Obviously, because my house I cannot sell, cannot rent out, so I'm not too pleased about it. Of course, when I have another house, I think this will be a great development because I can rent out at like a few $1,000s, yeah, and all that. But I thought there was this recent interview done by this this Hong Konger or something, right? He interviewed that girl, the NUS girl, said she expecting 10K, right? I don't know, like maybe they are fresh grad, they are earning like 10K, 15K, that kind of thing. Then this HDB is like peanuts to them.
If they're earning 10K, I don't think they can even qualify for HDB, right? There's a ceiling in terms of salary.
Is it?
Only BTO.
Only BTO, is it? So they can still go into resale lah.
Can.
Okay, understand. I would just like to clarify, because we had this discussion also on this 10K thing. I would say that it's possible. It's definitely possible. And I have friends that are in like investment banking or your sales, like specifically in the IB division. They tend to pay really, really high. Like 8 to 10 is really normal. But it's normal in that area. It's not normal in the vast majority of the normal undergrads. So that's that. By pegging her, I think a bit yuan wang also for her. I think when she accepted the interview, she didn't know that this whole thing will go viral and she'll go on to like all the media outlets. And she instantly became the $10,000 undergrad. Like people say that she's dreaming or stuff like that. I think that's quite unfair. It's an unfair classification or labeling of her lah. But I would say that if she's in that space, I think it's normal. But the numbers are transparent, so you can look at employment survey. So like I said again, 3.8 to 5 is the more normal number for normal NUS and NTU business undergrads. So
Okay.
I hope.
Yeah, I think circling back to your question, sorry, I digress a bit, talk about the 10K
Sure.
fresh grad. I think for the HDB pricing now, right, I feel, my personal opinion, I think for fresh grads, right, it's still quite affordable in a sense that they get a lot of grants and subsidies as well. And then on top of that, then their pay most likely will start to increase. I think for fresh grad, once you get confirmed and then within like 1 or 2 years, then your pay should like have the first increment, which is most of the time is quite a substantial increment from your starting salary. So I think if we look at that from that standpoint, right, most couples, like I'm talking about fresh grad, most couples, I think if I don't remember wrongly, they are able to clear their housing mortgage, right, around 7 years time. This is from the couples that I actually interact with in my small circle, my social circle. Most of them able to clear within 7 years. Means that both husband and wife contribute and they quite actively pay down. Like, so if they have any savings, they just repay more of the mortgage and all that. I think it's doable 7 years. But of course, I can't assume to speak for those, maybe they are not graduates, maybe they are more like Singapore, right? We have those more technical jobs that don't pay so well. I mean, that's like a fact, right? They don't pay so well.
That's why I wanted to push back when you mentioned that. I just went to Google on Straits Time. 2021 figures is only 33% of the population are university graduates. So actually, even if you take a standpoint of a uni undergrad, you are already taking that 67th percentile and up. So then what happened to the remaining 66% of the population? So I think the more fair comparison would be to take the median income of all Singaporeans, which is also transparent because Singapore Statistics Department, I give them 2 thumbs up here. But I think the general outcome now is household income is around median household income is around 9 to 10K. I think nearer to 10K. But a median income of a person is around 5K. I think the stats was just released recently. So if we make decision from that perspective, I'm not too sure whether we will say that public housing is definitely affordable, even though it's public housing. So yeah, that's that.
So based on a 5K gross income, right? You think it's not affordable? Dual income.
So dual income, right? But if it's single income, I'll argue that it's not affordable.
Single income still affordable.
15 years long.
But it will take slightly longer lah. Yeah. So that's the trade-off law. If you want one person to stay home, be a homemaker, then I guess you have to work with what you have lah.
Right. What about Bunti about this whole affordability thing?
Yeah, I think on this, right, I know we have been complaining about inflation's very high and so on, right? And I for those who are living in Singapore and maybe those other big city, I think similar situation is that housing is always one of the biggest expenses in our total expenses. Other than housing will be food and others, right? So housing wise, I think 2 things that we will look at. Number 1 is the rental. Rental properties has been going up a lot. So just some data points is that I have heard that HDB that used to be, like 2,500 rental, now they're pricing it at close to 4,000 or even more, right? So those that is 3,000 can go to 6,000-7,000. On house prices also, I think it went up a lot just in the past 6 months. So yesterday, I was just having a chat with a friend. They just bought an HDB, resale HDB, probably around, let's say 6 months ago. So they shared with me that the price that they paid, right, is like, like 40,000 above the CO, what do you call it? The COV, right? Yeah. So
above valuation.
Above valuations. So that's I think there are many reasons that we are in these situations. So if you monitor the housing market, ultimately it still come back to the supply and demand. And currently, I think the supply is greatly hit by the COVID periods where there's they didn't develop enough housing because of all this COVID hiccup and so on. So there's lack of supply now. And those who shop for properties, they will tell you the same thing, which is that when they look for houses, there aren't that many available. And those who want to buy houses, like say, for example, you want to get married and so on, you can't really wait 3 or 5 years to wait for the supply to come out, right? So you will still go and buy. And my friend who shared with me on this is that there's one available unit for viewing, and then people have to queue to get into the viewing. And once you queue into it and you look at the situation with the price, you are okay, you want to bid, you say, I offer a certain price, right? It's not like they were okay immediately. They will actually tell you that, okay, you go back first, you think about it, and then you come up with a price that you think is able to secure you the house. And then they will just based on all these bid and then to see whoever offer a better prices, then that person will get the house now. So that's the environment that we are in here. Compared to 5 years ago, it's totally different where, supplies, there's plenty of supply and so on. So I think all this will go through all this cycle because of the supply and demand and sometimes a government policy and so on. So there will be situation like this. But I also don't think that this kind of situation will last forever. So it probably, we are in this situation for let's say 1 or 2 more years, once we have more supply on the market, and then they will put downward pressures on the house prices. So I think for those who can wait, be patient a bit. I know that it looks very, how to say, not affordable, given the price has went up so much. And even if you don't want to buy, you want to rent, also feel expensive. I think we are in this tough situation. But I believe that on the salary front also, sometimes it just, there's some lag effect there. I believe wage inflation will still continue to go up, and the numbers that Chicken you just quoted, right? I think this is historical numbers. If you look at these numbers, let's say 1 year or 1.5 years later, it will reflect that the inflation in terms of the wage, right? It will go up now. Yeah. So that's my view.
Right. I think in terms of the model itself that Singapore government adopts, right? So this BTO thing has been working for the last decade or so. I sat through some of the parliamentary debates, and there's been, I think this suggestion actually came out quite some time ago, but even before COVID-19, right? They were saying, why not just print more houses first? So many people are saying, why not you build first and then sell later? So that was one of the contentious point. And I think somebody brought up in terms of historical sense in the early 2000s, they had that model. And then there were too many supplies out there. There was like 30, 40,000 empty houses just waiting for people to buy. And that was also because the period of the Asian financial crisis. So after 98, everybody lost their jobs. It was doom and gloom. And then that's why nobody wanted to take on leverage. So here you see there is two extremes of the same problem. One is oversupply, one is over demand. So then we are stuck because within the short span of 20 years, we see both situations playing out. And whenever one situation play out, suddenly we switched over to the other extreme. Correct? Like oversupply, and then we switch over, immediately all become BTO. And then now BTO already, not enough, then we now everybody's starting to push the government to build more. What I really don't understand is why, I thought Singapore always like to take the middle ground, right? So I don't really understand why there really isn't a hybrid model that was already implemented prior COVID-19. So then COVID just catalyzed the discussion to say that, okay, we probably need a hybrid model. So in future, maybe in the next 5 to 10 years, maybe even that if there is a slight oversupply, we are okay because at least there is this buffer in case some crazy things happen again. Touch wood, of course, I'm not saying that another pandemic comes, but I'm just saying what if another crazy surge of demand or undersupply and stuff like that. So that's my first point. I think on the second part, there is this, I think it was Mr. Lu that suggested this asset pricing model that the PAP has very smartly came out, because I think at the end of the day, public housing has been extremely affordable for the last 20 years. But there was this expectations that were built in to many new couples saying that once you buy a BTO, you are most probably going to exit with a profit. And this has become a norm. Like it became given that, BTO, try to settle down, build a family, buy a house, and 5 years later or after 10 years of the MOP, you are probably going to be sitting on a huge amount of gain. And because of these expectations, I think it kind of misdirected the market, and everybody just buy first. Just treat it as an investment vehicle. 5 years later, we're going to profit. And then it just fuels the whole demand, right? And then everybody just, based on that kind of expectations, it inevitably caused some sort of problem, because the new BTOs that were released, they try to price it to the location, right? So if the recent, let's say, the recent sales were, let's say, 1 million. So the BTO initially was maybe 300,000. Then the government think, I cannot be selling 300,000 again, then let you stay for five years and then sell it for 1 million, right? So then they start bumping up the BTO prices. And then when they bump the BTO prices, the new batch that just came out of MOP will be like, see, the BTO prices is now 600,000. So I'm going to sell at 1.2. Then it becomes a very toxic and a very vicious cycle, which I thought was not very healthy. I mean, this is my very superficial understanding. I'm not in policy work, but I'm just expressing my concern as a Singaporean that might be going into the market soon. assuming that I can find a girlfriend. But yeah, that's my perspective.
Yeah, I think on this, right, two things. One is that sometimes you just need to trust the market and let the market work out itself. When I say market, it's not stock market. This market is talking about the supply and demand. So now, because of lack of supply, prices goes up. It makes more sense to like approve more projects and let more units to be available. So that one, I think government also can profit from that if you can sell it at a slightly higher price and also bring down the cost and help improve the affordability, right? Secondly, we need to remember that the entire HDB things itself is not a market thing. It itself is a government policy to kind of like make sure that houses remain affordable. So that's why there's a lot of restrictions. Say, for example, you can't buy, one person cannot buy 5 HDB and so on, right? So itself is a policy to achieve the intention, which is to make houses affordable. But between that and the market, you cannot go too far away from the market, because once you go too far from the markets, right, there will be a lot of other issues. Say, for example, like the you mentioned about the area is 1 million. Suddenly you price it at 300K, and then only a handful of people get that quota and bought that area, and they hit a jackpot, right? So is that fair to other people who are not able to beat that area? So there will be a lot of issues when that distance between the market and whatever dictated by the governments still too far away. So they need to be careful on that as well. So need to, strike a balance. I think that's the way to go.
Yeah, and I think the issue is always we know of the problems because the problems have been rinsed and repeated in Parliament by a lot of the constituents and people feedbacking to the PAP, right? But the issue is we always say that we are striking a balance. We are trying to solve the issue. We just convened the task force. We are studying the problem, right? But I would like to echo that probably most Singaporeans just want a decent enough solution, and we are aware of the problems, but we need to find a solution to the problem. I think that's just our bottom line. Like we know that it's an extremely complex issue, and we're not just going to say, oh, the government is lousy, they don't know how to solve the problem. No, we're not saying that. We're just if there's more noise, then it makes the issues more urgent, so it becomes a higher priority. I think that's just my perspective on that. Yeah. Then for Eric.
Unfortunately, Chiking, I think what you said rings very true, not just for government, but I mean even in the service industry, everything else. Also, this is a tried and tested thing, right? If you don't make noise, the thing will take forever to get resolved, and sometimes the person even forgot that you are there until you say, "Hey, where's my order?" Like so that is a very common human nature, I guess. When people don't press your buttons, nothing is going to get done. So, but on the issue of HDB pricing, right? I personally feel that Singapore, although we are quite a small space, but there are still big differential in the pricing mechanism, not just private, public, and also in the district. Like for example, right, if you feel that it's very unaffordable to stay like Marine Parade, East Coast area, then just stay Sembawang. Like what's the problem? Like then you say, I want to convenience, I want to stay near MRT, I want this and that, I want high floor and everything. Then of course you pay a premium, right? You want to stay in those core central region, you pay a premium. You want to stay near your parents, if they are in a mature town, you pay a premium. So every one of those things, right? When you're a property buyer, of course, all of us like you're king, right? Like the Hokkien people, like the last one I cannot say, but you're king. So you want cheap and you want good, but sometimes cheap doesn't. If it's cheap, it may not be good, right? Most of the time. So if you want good, then it becomes expensive. So it depends on what you really want, right? I mean, you can find those like second floor kind of a small HDB 4-room in quite a ulu area that has no MRT access, just building up, non-mature estate. I think you'll find it quite affordable. I mean, for the vast majority, even for the 60% people that you're talking about, they earn less than the median. I think they can still afford it. But the thing is, because we are so 已经被宠坏了 so called, like we want, like, wow, my friends all got like high floor near MRT and very all the amenities around near to their parents, etc. So I also want the same thing, but I cannot afford it. That's why I make noise, that kind of thing. So I think it's really a matter of what do you really want. You want cheap, then it can't be too good. I mean, then where does that leave all the prime estate? Then that becomes a problem. So I think that we are still at a stage where, you know, you have very pricey HDBs. They are pricey for a reason, because of location, because of the type of town they are in, and whatever lah. But yeah, so I think the vast majority should still be able to afford a roof over their head. Yeah, if you really want to get just a roof over your head, I think as of now we still don't face the problem like what Hong Kong faced, because they cannot get any, you know, like the housing is so crazy expensive. If like a HDB can go for like 2-3 million, like, so you want to know that part is very difficult. I understand then why the people would be unhappy, but as of now, I think 15 years and you can own the building with, I think, using your CPF to service it, maybe at least half of it, I think it's quite okay, still doable kind of scenario lah. I think that's my point of view.
After 15 years, do you really own it though? Or is it a long-term lease from the government?
Okay, so I think the idea, right, that they have for this public housing, right, the reason why they say is subsidized housing is because it's on a long-term lease. It's not like perpetual, like freehold for you. That's why it's kind of subsidized from the government in that sense. So I don't know, even private also have 99 years. So I don't know, you can think of it in the same vein, even though it's private. So I'm not too bothered about the 99 years, because I think our lifespan not really that long to challenge the 99 years. So if you go and buy your BTO now, I don't think you outlive your HDB lah. So the whole point is for you and your family only. It's
Right.
not 3 generation.
Yeah. I actually do. I mean, I do agree. I'm just like, sometimes when the terms used, right, it's a bit. I mean, I think they do call it home ownership though, even though it's 99 years. But it feels a lot more like a lease.
You mean like full self-driving?
No lah. I mean, from an accounting way, you see something, you're gonna depreciate something over 99 years. Okay, you can call that you have ownership of the thing, but if there's a useful life to it, especially when you compare it to something else like a land ownership, right? People 999 or freehold, I would consider that more towards the ownership side rather than a 99-year lease. That's just the technicalities.
Yeah lah, that's just like the phrasing, semantics.
Yeah.
By the way, just now you mentioned Sembawang, right? Sembawang is one of the places that, in terms of price increase in the past, I think 6 months or so, one of the highest. I think there's this table that I saw from
change
50%.
Oh, Eric, like that.
You shouldn't change.
See, like that means it will keep moving, right? Move until a point where, what if everybody develop already, then no more already, this kind of thing. Like there's no more.
There's always Pulau Ubin.
I was just saying, it used to be cheap. Now it's not cheap anymore as you look at the price, the market prices.
Comparatively, if you compare to like maybe, I don't know, Queenstown, Clementi, Tiong Bahru, Redhill.
Of course, those are even more expensive.
Those are really nuts, yeah. I mean, if you value the kind of the prime, how close is it to the city, right? Then okay lah, by all means go for it. I have a friend who stays in those kind of prime area. I mean, she pay through her nose, but you pay for the convenience of near your workplace. So yeah, I think something got to there has to be kind of I'm scared to use this word, like a trade-off.
So we hope you guys enjoyed the discussion in this episode where we discuss day-to-day matters as a fellow Singaporean and also your investing portfolio. So with that, we look forward to seeing you in the next episode. Goodbye.